This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil with Invest Like a Pro. So I had a question regarding trading in a range. It's been a long time since I've done a video on this. In fact, I think I've only done one. I mean, typically I'm looking to play trend trades in two different formats, right? I look for breakout trades. I've done a number of videos on that, and pullback trades, which I've done probably the most amount of videos on. But some people like to trade when it's in a range. I'm going to give you, I think, what I believe is a really big edge when you're trading inside of a range. I use 3 time frames when I'm doing range trading, and then I also want you to know how important the DI lines are for this type of trading, and I'm going to show you why. So let's go ahead and get into this. And the example I'm going to use is AVGO. I've got a daily chart in the upper right and hourly chart on the left, and then I've got a 10-minute chart on the bottom left. And I've already got the box of where I'm focusing in on highlighted. And so we always start with the higher time frame. And what I want to point out here is the starting point should be a well-defined range or area where you've come down. I mean, you can see here, we came down and held this spot and then rallied up, came down and held this spot, rallied up again, came down, held this spot, rallied up, tried to get through, but failed. And now we came down to this spot again. Okay, so it doesn't mean it's going to hold, but I do want to have some form of, support, well-defined support when I'm doing this. And so when I see this, I'm going to sort of be on the lookout for signs of a reversal when you come back down to this level again. So that if I'm looking to trade in a range, now it might be a stock that you're really interested in and you're watching, or maybe you're trading short term on a stock that you watch all the time and you only have a couple of those. So you need to do trades on a range when it's in a range, because it spends a lot of time in a range. Stocks do spend a significant portion of their time in a range. What I do when I'm trading, since I don't trade intraday as much anymore, now what I do is I just go through and screen and wait for stocks to trend, and then I look to buy pullbacks. So this is a little bit different than what I've been discussing, but I do think it's relevant, and there's a few key things that I think can be useful whether you're going to trade or not, just to be on the lookout for. So we're zeroing in on this area, and one of the things I want you to notice is what's going on with the ADX DI component during this period. If you notice, the all 3 lines are just kind of chopping sideways, and the blue line, the ADX line, is not only low, but it's going through periods where it's declining, and then it goes through a little pop, and then when the stock pulls back again, it's actually going through a declining phase. When I see that, I know that if I want to trade, what I'm actually doing is I'm going to trade the pops and the DI lines and play them counter trend. And so what I mean by that, let me just, I'm going to take this off. So what I want you to think about is when you've got a defined support area, and let's say we got this low here, and we come back down to it this time, and then let's say right here, starting here, we know we've got an area of support. For all of June, this was holding, and now we come back down to this level. And notice what happens to the red DI. The red DI pops over 25. But we don't really have any kind of a true shift taking place, and ADX is very low at this point. So I would say when I get a red pop that I'm looking to go the other way when we have low ADX. And when I get a green pop over 25, I'm looking to take a profit. And so if you notice, so if I start circling these areas, this is where we're popping down, we're popping over 25 with the red, and this is where we pop over 25 with the green. So I can see the correlation here and here. So I hope this is making sense to you. I'm trying to trade counter trend pops. So if I go through and I see here's another red pop, and actually even on this red pop, ADX is actually still declining during that period. I get a lot of confidence when I know I have support and I'm coming down to a prior area with declining ADX and I get a red pop like that. I'm going to go down to the smaller time frames and look for a trade. All right. Now, the profit area for me is when this green actually pops up and tests that red line. So that would be up in this area here, and where this gets up here. So that's kind of how I would be looking at it. I don't go for the kill shot in a trading range, right? I mean, I've got a defined support area. Let me do that better. I've got a support area here, and I've got resistance up in this area. I'm not going for a kill. And before you trade when you're in a range, I want you to evaluate whether it's worth it from a risk reward standpoint. Look at where the range is and how big it is. And then you have to figure out how much you need to risk if you want to play this trade, and then determine whether it's worth it. If you don't get at least 2 to 1 inside the range, then I wouldn't do it. I wouldn't play these trades for just 1 to 1. So you were looking for periods where you've got a big enough range to play from low end to upper end. And you're also looking for periods where you have low ADX, and you get these tiny little pops that don't have any follow through. Normally, you just want to avoid this if you're trend trading. But if you want to trade in a range, this is actually what you're looking for. So once I see this, and now I come down to this area, it's tested several times. I know I've got a red pop, and I know I have low ADX. I have no volume suggesting that there's any kind of real selling going on. And now I go down to the lower time frame. At this point on the hourly, I'm in this box here on my way down, and actually the stock even gaps down this morning. This bar here shows a reversal bar right in the area of this support. So this is the type of thing I want to see. So the first thing I really want, obviously I start with the daily, and then when I go down to the hourly chart, or in this case it's the hourly. I mean, this can be done on higher time frames. If you want to do it off a monthly and a weekly and a daily, you can do that. I'm just using this because it's a great example, coming down to support, and then I want it to be stretched away on the next time frame down. So in this case, it's the hourly, and I want it to be stretched away from the 18. That's preferable. I want to show that there's been some velocity to the downside, because that's actually going to create the red pop on the daily chart. So if I get that stretched away and then I see a reversal bar, you see this bar, this candlestick. In fact, what I want to do here is zoom in on this. So we come down and we're stretched away. We're testing this low. We know we've got a pop on the red DI on the daily chart, and then we get this reversal bar. Okay. So once I see that, and I know I'm stretched away, I'm going to go down to the 10-minute chart. And I'm going to do this while the hourly chart is actually in a downtrend and stretched away. I'm not waiting for the hourly to reverse its trend. Okay. I want to do it when it's in a downtrend but stretched. And then I'm going to go and look at the 10-minute. Now, if you notice what the 10-minute did, at the bottom, we broke a trend line. Had the gap down that caused the trend line break, and then we rallied up, broke the trend line, came back down and tested the area, especially around the gap. And then on this green bar right here is where I would say that's the trigger bar. The 1 is the break of the trend line, the 2 is the test of the low here, and then 3 is coming up through the moving averages, and especially with some velocity or a bar like this. So I'd probably be somewhere in the middle of that bar getting long 465, and even in 466, there's nothing wrong with that. So that's how I would be using that time frame to get in. And I know I've got I've got the hourly stretched away. So I have some room before I hit any resistance on the hourly chart. Now, if I'm going to do this, the target is obviously up in this area, up around 475 to 480. And that is plenty of room, because if I'm trading this, and let's say I'm in at 466 and I put a stop in at 461, I'm risking $5. As long as I can get $10 to the upside, then I'll do the trade. So that's how I would determine whether I want to do the trade, how I would evaluate it from a daily chart, go down into the hourly, look for it stretched away, and then do the trigger, look for the trigger on the 10-minute. So hope this helps. Post any questions or comments, and we'll see you next time.